Backtesting is rubbish. It's how you do whatever you do that makes it good or rubbish. So for the past 2 weeks, I have been backtesting the Euro USD on Trendline trading. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. Trading is one of the skills that requires your knowledge and experience. However, something I have come to understand is not so many jobs have a way of giving you experience from the past without you being there. You have to actually sit down there for months, weeks, years to learn the business. But something like trading, you actually can experience the past, and it is a miracle. This is where we hear of something called backtesting. Now, I know a lot of people are going to dive right in the comment section and be like, yeah, you're right, you're just chapping, you're rapping, you're making noise, you're yapping. Backtesting is rubbish. No, it's how you do whatever you do that makes it good or rubbish. That is the very first thing I'm going to say right here. How you do what you do is what makes it either good or rubbish. You could have a very fancy car and the way you drive it is terrible. That car is going to end up in the junkyard pretty fast. So the same thing with backtesting. It is a tool to be used, not to be criticized or determine if it is best or not. No, it is all your opinion based. Now, why am I saying this? So for the past 2 weeks, I have been backtesting the Euro USD on Trendline trading. I am vigorously going through it. Now, I'm trading it on the 4-hour time frame. No flipping of time frames to the higher or lower time frame. Just trading it right there, seeing price move on the 4 hours time frame and following the trend line from that time frame. In my trading and learning, I have learned 3 key things, and I'm going to be sharing them in this video. So what are these 3 things I've learned? Number 1, tight trend line cues, because it's going to make your trading look like you're trying to flip an account. Literally, I'm going to give you a very clear visual situation. This is where I'm backtesting. This is Forex Tester. I'm not trying to promote their website for you. I'm just saying this is where I'm carrying out my backtest. And something I came to notice instantly was this. The very first time I started this backtest, I was going aggressive on it on the 4 hours. Let me go down to the 4 hours and head backwards for you to see what I'm talking about. So I was going very aggressively with it. I mean very aggressively, I mean absolutely aggressively. You could see my trade lines right here. See them? These are the trade lines. They look like they are drawing market structure. Why? Because as soon as the price is closing, I'm taking the opposite side of the trade. And that is what trend line actually is. Funny enough, when price is closing, I'm always ending up taking the other side of the trade, according to this trend line strategy. However, I realized it was not trend line that was telling me this information. It was me drawing unnecessarily tight trend lines. I wanted to squeeze out every single price move I can see, and you can see what it led to. So many red buy rules everywhere. I had so many blood, and then very few greens. You see some red, another set of greens, then red, another set of green. And let me just show you straight up on the journal. Yeah, right here. This is the best place to see it. So you can see I was buying, selling. I was flipping. How do you even know I'm actually flipping to an extent? Look at it. As soon as the trade closed, I don't give it a chance. Trade close, I'm in on the next one. Trade close, I'm in on the next one. There was no breathing space. So this is why I'm saying, what do I mean by tight trend lines? So let me show you what I mean by tight trend lines. I'm just going to come straight to where price currently is. Let's head to where price currently is, and this is what I mean by tight trend lines. So you can see how price really is right here, right now. This is not current day and time. This is 22nd of August 2018, and this is one situation. So I know some people would say if I had drawn a trend line like this, I would have bought here and followed price up and all that stuff. Yes, it will work in training conditions, but you see the same situation, put it somewhere like here, you can see how I get gutted in consolidatory situation instantly. Why? Because I was doing the exact same thing, tightening the trend line. You tighten the trend line before you move, price has stopped you out. You tighten the trend line before you move, price has stopped you out. You tighten the trend line before you move, price will stop you out. So it's not as if you shouldn't have tight trend line, but you should have very strict conditions to have tight trend line, which is unless the market is absolutely ripping in one direction. That is when you should have tight trend lines. The second thing I learned is this: market structure is key. Now, I have backtested some other strategies in the past 2 weeks before I ever started doing the trend line, but the trend line has been the longest one in this whole opinion. The rest of them, I have thrown them away. What I came to realize is market structure is key. Market structure, understanding higher highs and higher lows is key. How did I know that this is a consolidation? Price was not discovering new ranges. Price was just bouncing around a zone. And in that bouncing, I had taken enough losses in that bounce. You can see so many losses in that bounce was taken. I had taken it enough and then I stopped. I waited for price to make a clear move. A clear move in one direction. And you can see it. This is it. Let me just show you a clean example. So I had this trade and then I had this one. And then I had this one. Loss, another loss, another loss, another loss. And then I said, okay, just wait. What are we waiting for? We're waiting for price to break outside the range. At this point in time, I had taken 4 losses in a row for me to realize that this was a range. So I had to stop and wait for price. And then as soon as price made a clear break, okay, price finally broke outside the range, I decided to take my chances. And you can see how that led to one good winner. This is $19 in profit. And mind you, it's the same lot size, right? $19.90 in profit. But look at how much I had lost. It is paramount for you to understand that price, when it's bouncing around a certain level, trend line does not work. And I felt this the very first time in Australian dollar, US dollar, where for the past 6 months of me learning trend line in real time, which you can see in my previous sets of videos if you go back, it was absolutely terrible for me. I kept losing on the Australian dollar, US dollar. I have not made a single profit until the very last video I had on the Australian dollar, which I made only one out of about 7-8 trades in one market. I was losing consistently. Matter of fact, it was losing me money I was making from other markets. So when the market is trending, trend line is terrible. When the market is ranging, trend line is terrible. When the market is trending, trend line is useful. So just like the name, trend line is following useful trends. The next thing I just want to do is, this is just a bonus, something I would like to add for you to understand. Now, this is not something everybody takes to heart and people appreciate, but something I've come to learn is this thing called psychological levels. Now, psychological levels are like round numbers. Trades happen because there are humans involved. Now, yes, the banks, they use algorithms, algo and all that stuff. It is true. But round numbers are still significant. It's something I have come to observe. Not that it's significant like price is just going to stop at a round number, boom. No. It's not as if price is going to run into a round number only. No. What it is this. It just gives you, as a human trader, clear levels on the charts so that you are watching price. If price is discovering new levels. So for example, looking right here, you can see price was clearly discovering new levels. That is a trending market. But you can see right here, price kept within a set of range of levels and it was not going away from those range. You will know you are now in a ranging market. So this was just a bonus for you to see that psychological levels are still good. You can decide to use psychological levels alongside trend lines. Ever since I started using psychological level alongside trend lines, I'm going to show you my journal. You can see from the start it was terrible. I had no stop loss, which is part of the things I was doing with the trend line. And then when I learned to start using market structure, I started to have some stop loss, placing stop loss in some places. However, I got not really tired, but I kept losing. I still kept losing more than I was winning. So I decided to pivot a little into something I feel. I said support and resistance. No, then I said, okay, let's see what psychological level actually does. I've heard people use psychological level a lot. I decided to start using it. And then when I started using it, I want you to observe something. Did you notice that there was a time I started having winning streaks? Yes, there were still massive losses, but the winning streaks that came literally bumps this account back. And this account is up just 8%. In 2 years of trading, I've only achieved 8% of profit. 8%. I want you to see the analytics. You can see I have taken 125 trades, 50 winning trades and 125 trades in total, 75 losing trades. So I have a 40% win rate. There's a 40% chance I would win a trade. 40%, which is not good. I have way more short trades than long trades, but my short trades have cost me a lot more than my long trades. Now, I don't really care about this. You can see how it's just the euro US dollar. I don't really care about session as I'm trading the swing trade. It's important for you to see things, but not really important for me. This is where it matters. Now, net profit is $60. Gross profit, I have made $527. Gross loss, $467. Now, the profit per month is like 1.8, which is bad, dollar. Average profit of $10, average loss of $6. So, my max drawdown is $58. Now, on the $1,000 account, that is 5% of the account. 5.8%. That is a lot. My max daily drawdown, or rather my max daily loss percentage is 0.06%. My profit factor is 1.13 and my return is 6.0. This is my stats. Total trades taken is 125. Total days counted, total trading day counted is 121 days. I mean active days of my trade running. Profit trade 50, lose trade 75, max consecutive profitable trade 6 in a row, max consecutive loss 6 in a row. Sorry, 4 profitable trades in a row, 6 loss in a row. Average trade per day is 0.13. It's clearly swing trading. Average trades in a month 3.92, almost one a week. Profit trade per month 1.5 and loss trade per month 2.3. So I take more loss trades than profitable trades. Max profit is $27, max loss is $31. So my total days processed 970 days, months processed 31 months. My maximum lot size ever used 0.02. Now this is what I was talking about. I can almost never lose an account. Rather, I can never lose an account. I would rather remain break-even or true in trading. That's what it means. Because I didn't even risk a lot. I'm risking reasonable. Restoration factor 1, reliability factor 0.03. That's terrible reliability. Win rate 40, lose rate, you already know this. Number of times TP was changed 177 times. Number of times without TP 70. Amount of times TP set 1:2:0, 1:3:1, 1:4:0, 1:5:0. And over here you get to see the actual breakdown. So we're going to start from 2015 December. So I hope you learned something from this video. I'm just sharing my opinions, sharing my experience in trading and the little things I've managed to learn. I'm 1 year old here on the channel, though I've been trading for longer, and not really trading but learning trading for longer, and I'm still going to continue learning it until I find profitability. When I find profitability, then we can now start actually trading the real funds. There are funds, I have some cash, but I'm not going to put it into the risk space. I'm going to learn before I start putting in that cash into reality. So thank you all for watching. See you all on the next one. Do well to hit the subscribe button, share this video with someone who you think might find it valuable to understand and learn this or grab this knowledge. See you all. Peace.